Happy Sunday, guys. It's that time of the week where we go through the watch list and I can give you some ideas, tell you what I'm looking at and why. So I think the big news we should probably start with is the Fed cuts. That's what is on everyone's mind really at the moment, especially the large market movers and large participants. So if we can understand what they think, then we have a better chance in the market. So this is the CME FedWatch Tool. So what we can see is 76%. So this is a expectation of a 25 basis point cut compared to a 24% expectation of a 50 basis point cut. Now, this is quite interesting actually, because this 50 basis point cut was at 36% on Friday. Oh, there you go. You can see. So one day ago on the 23rd, this was at 36%, which is quite large. So we've had over a 10% drop. Now, this signals that we could start expecting a 25 basis point cut rather than a 50. So what the general consensus is, according to bank reports and lots of institutions, is 25, 25, 25. So 3 cuts of 25 rather than a super aggressive 50 to 75 basis point cut, which is good because that means there'll be less shock. There'll be less, huge moves in the markets. Now, obviously, depending on what type of trader you are, what you want, that could be a good thing or a bad thing. But for me, that's fine. I'm quite happy with just some slow and steady 25 cuts. So what does this mean for the dollar? Well, the dollar generally will see downside movement. So let's see here. We can see, the dollar's been on a rampage to the downside since sort of July, really. The end of July, we've seen the dollar just slope to the downside. So this is now down 5%. And we've had very little pullbacks. We've had these very small moves to the upside, followed by a strong move to the downside, small move to the upside, strong move to the downside. So the dollar has been very unforgiving for any bulls, which isn't good actually for me, because I quite like buying the dollar. Generally speaking, the dollar is a pretty good asset to just buy. However, at the moment, it's not really the macro environment to be doing that. So what we can see is we've broken out of this uptrend, which we can see I've got drawn up here. So I'll just delete this now because, don't want to clutter the charts. We've also got this clear downtrend to the downside, obviously. Now we've got these 2 levels of support. So we've got one here at sort of just the 100 to 101 mark, and then we've got another one down here at sort of the 99 level. So these are sort of the 2 stopping points that could work for the dollar. If we break past these 2, it might be a bit of mayhem for the dollar. There's not really much left to be a support other than possibly down here at around the 95 level. So around $95. So it's something you should be keeping an eye on, something you should be very cautious of. Now, the next point I have here is just because we are heading into Fed cuts, it doesn't necessarily automatically mean that euro dollar, pound dollar, Australian dollar, are all just now going to rocket to the moon. What we have seen so far is that, however, so we've seen, euro dollar, pound dollar just rocketing. However, when we actually get the Fed cuts, it may be a bit of a different story. And the reason is because the Fed isn't the only people looking to cut or in an easing cycle. So it's relative. So the dollar may look weak here. However, compare it and in relevance or relative to other currencies, it may still be quite strong. That's not the story right now. We are seeing a lot of inflow in the in the euro and in the pound, even in the yen, to be honest, and a lot of outflow of the dollar. However, I think this is a lot of more speculation and fear compared to what the market actually will be in the next sort of 2 to 3 months. I could be wrong. Maybe I am wrong. However, this is just my current view, and I want to be honest. I'm not going to sit here and say, oh, well, it could go up, it could go down, because, then I'm right either way, and it doesn't make much sense. However, for right now, the markets are heading to the upside. Pound dollar is looking beautiful. My long term, or I guess my sort of medium term target on pound dollar is the 1.35. I've been mentioning that for quite a while, and that's because it is a level that I know a lot of institutions are looking at. So this is sort of the main level. So essentially, I am looking for the pound dollar to have some sort of pullback. I think it's very, very extended at the moment. Now, if we look how deviated we are from the 200, the RSI on the daily is overbought. It's also about to be overbought on the weekly time frame. You can see here. The H4 and the hourly are all overbought. It's a very extended market, so I would not be buying right now. If you're not already in these dollar pairs, it's kind of, you've missed the move for now. So I am looking to see some sort of pullback here to around 50%, and then a catch up to 1.35. That's sort of the move I am looking for. Now, whether we'll get that, I don't know, because the dollar is just very weak at the moment. Pound and euro are heading to the upside very, very dramatically. Now, moving on, we do have Dow. Now, the Dow is reading bullish on the Edge Finder, so I can pull that up for you here. So we can see right here, the Dow is very bullish. Let me just find the data when it loads. So here we can see COT data, so institutions are buying. Retail sentiment is also bullish, so they are majority short. Seasonality is bullish, trend readings bullish, GDP, retail sales, inflation, interest rates are all in favor of this position. So speaking just from the data at the moment, looks very nice to be buying. Now, this is exactly the same as all of the other pairs at the moment. It's very extended. We did see, a huge rally to the upside here. Almost, in fact, essentially a full correction that we've had of this move when we saw the risk-off market come in. We also have the H4 that's just about oversold. So this tells me we could see a pullback. Now, to where, I don't know. I'm a bit hesitant now to say that we're going to see a 50% pullback because that is quite large. So if I was, however, looking for 50%, I'd be targeting sort of the 42.8 thousand level. And that's just because it's a fib extension, not really for any other reason. Stop loss would need to be underneath these lows right here. But yeah, this is kind of the only approach I'm looking for at the moment because there's not really anywhere to look. I mean, how can we really try and buy this at the moment? We can't. We can only wait for a pullback, and no one can judge how deep a pullback will be. So yeah, really need to sort of just wait at the moment. There's not really too much here. Now, oil looks good. I am a big fan of oil. Now, if anyone is a bit confused why I'm looking to short oil, it's because if we look at the seasonality of oil, and I made a video on this specifically, so you can go on my channel and watch the sort of deeper breakdown on oil. But yeah, seasonally, oil is very, very, very bearish towards the end of the year. Now, we also have a lot of pricing out of the tensions in the Middle East. So we did see a large move to the upside on oil right here, and this was because there was a lot of tensions going on in the Middle East. However, there's been more talks of ceasefire. Things are sort of relaxing. So investors are being cutting out of those positions with less expectation of a huge escalation. So using the fib here, we draw it obviously from the high to the low. We've got the 50% pullback here. Price is underneath this 200 moving average. The RSI is overbought on the H4. So to me, this looks like we could still be heading into a pullback and then a move to the downside. Now, the thing that kind of puts this trade off is the Fed. So when we did see Powell come in and start talking, we saw the market start to rally. Now, that's a little bit of a red flag for this position. However, I am sticking to my guns with a bearish oil. So if we can get this level tagged, I will reassess. I'm not just going to jump in, but I will make sure that there are more factors to suggest bearish than bullish. And I will take it there take it from there and continue to see if I am happy to take this trade. But for now, I think it still has some potential. Moving on, we have the dollar Canadian. Now, I've been saying for a very long time that this is a bearish asset. I am looking to go short. The problem is I missed my entry. Well, I didn't miss my entry, actually. The entry just never came. So I was looking here for a pullback to this sort of previous level of support, and we never got that. We did have a little attempt here, didn't quite make it. Another one here, and again, we didn't quite make it. So I am looking to get some sort of pullback on this pair. Just like all the others, it's very extended. We can see the H4 RSI right here, very oversold. So something interesting to look at, but at the moment, again, there's no trade here, but there could be sort of next week, and we can see how it goes. So the next thing I'm looking at here is the Euro Australian. Now, I think the Euro is actually not very good. I'm not happy with the Euro in terms of the economics. So I am looking to go short. I think the Australian dollar is doing okay. Now, the main watch I had on here was the head and shoulders and this neckline. Now, I don't trade head and shoulders really as a general rule. It's not something I care about too much. However, it was very obvious on this chart. You know, it doesn't take a genius to see a head and shoulders here. And we also have this level of support, which is also known as the neckline when you're trading this pattern. So I am waiting for a very clear break. The problem is we're not seeing that yet. We've seen sort of a bounce off this level. So yeah, it's one of those ones where I kind of just need to keep an eye on it. And if we do get the break, then I'll take a try and see if we can get a sell position. The other sort of red flag here is the 200 moving average on the daily is still bullish and still below price. So this could act as a dynamic support if we do break below. However, that's, you know, something I'll have to monitor if I do end up getting in. Next thing is the Australian dollar against the US dollar. Now, I've been talking about the ING 1 month target. So the 1 month target they had here for the 0.68 level, that was more towards, you know, the expiry date for this level was sort of the 20th of September. And this has just been reached in no time. I think they put this target out roughly when price was around here. I think, don't quote me, but I think it was around here on the 20th of August. So it wasn't too far away, but we got there very, very quickly. So from here, I don't really have any expectations. I am just watching this chart. So I don't want to sell because obviously the US dollar is losing value. The Australian dollar, as I said earlier, does look quite nice for a long position. So I think we could get longs from here, but again, it's just trying to find a target looks a bit difficult. Possibly this 50% level wouldn't be too bad here. This would give price time to sort of have a very small mean reversion here back to the 200 moving average, fix the RSI from being oversold to hopefully, from overbought to possibly oversold. And then we can maybe get in for a target around here of a relatively wide stop. And this could make it, you know, a 1 to 2, 1 to 3, depending on how you execute this. But yeah, unfortunately, there's just not much really on the markets at the moment if you're not already in any trades. I'm going to go into one trade that I am in though, which I am quite proud of. So I'll show you that at the end. So NOXSEC, you know, still looking to buy NOXSEC, just not yet. The daily looks very bearish. The economics are very bullish. So yeah, more just waiting for a very clear place to buy. At the moment, we are seeing this really strong descending triangle. And again, this is on the daily time frame, so it's a bit of a red flag to stop buying this right now. The US dollar NOK, now again, this is one I've been speaking about for months, and I was looking to short up here, and I just didn't get in. I'm really, really sad about this because it would have been a really good trade. However, I'm still looking for some sort of pullback to potentially get into this short. So as for my open trade, I am in gold. Now I called this one in the Discord. If you want access to profitable signals with professionally written trade ideas to back these trades up and to learn real trading standards with technical analysis and geopolitical and macroeconomic education with our videos and PDF resources, live webinars, and our proprietary research documents sent directly to you, then you can join our private Discord at elitetraders.io. Anyway, back to the video. So if you didn't catch gold, I'm sorry for you. I got into a little very, very minor disagreement on Twitter with someone about this. Oh, why are you buying gold at all-time highs? I thought the saying was buy low, sell high. And my response to that was low relative to what? Because to me, this could be low. I mean, it clearly in hindsight was low because, price was up here. It's now down here. So low on what? Low on the monthly time frame. Then I don't think we'll ever get to a low price really. But it's all relative, so don't really take that saying of buy low, sell high too strictly because, low and high compared to what? So essentially bought off this level of resistance. The reason for this trade was this fib level here. So we draw fib from low to high. We had the 50% pullback, and this actually did come and meet the 0.618 level down here as well. So executed on here on the, I think it was sort of the half an hour time frame I actually took the trade. But yeah, sort of sniped this one. Really proud of this entry so far. Our stops are at break even, which I should probably draw up here actually. So yeah, we're trailing our stops really aggressively on gold because what I don't want to see is a repeat of last time when we created all-time highs and we just faded to the downside. Now this pullback here was very strong, and then we saw this bull trap get formed, right around here. I don't want this to be the same situation where we have this fade, we have another bull trap right here, and then continue to the downside. So our stops are at break even just to make this completely risk-free. If it rallies to the upside, great. If we do see a fade to the downside and profit taking, fine, we're out at break even, no problem. So yeah, that's essentially it really for now. There's not much to say. So we've not got the bank reports in yet to cover the Fed. Now I do really like to see bank reports after large sort of events such as this, because then I can get a really good understanding of what the institutions are expecting and looking at and think, and that can influence what I think as well. So what I'm going to do is put out probably a second watch list, maybe Monday or Tuesday, and I'm going to give you a lot more of an economic outlook rather than just a technical outlook like this, because I think it's valuable. It's all well and good for me to sit here and say, oh, well, the FedWatch tool says this, I think that. But if I can sit here and give you real institutional information that's straight from bank reports, I think you will get a lot of great information and value from that as well. So, guys, feel free to check the links in the description. We've just relaunched the Elite Traders website. We're offering account management now as well. We've redesigned the website, and we're also offering a new, very, very cheap package for our Discord. So feel free to check that out, and I shall see you later. Thank you for watching. Have a safe week. Don't get chopped up. Don't lose money. That's never the aim. Remember, capital protection is your #1 priority.